Hetal, so I believe that you have been investing for a pretty long time, and you have not just been investing, but you have also been invested in those startups personally, also, right? A lot many times as mentor
Yeah.
as well. So, what would you say is your process of finding the best startups to invest in as an angel?
So I have a simple 4 point checklist which I apply whenever a founder is pitching to me. First one is the founder's profile, right? I mean, what's the background? What's his alma mater like? Where he has worked before? Has he been an entrepreneur before this? There are some certain traits which I look for in the founder's profile, which gives me the confidence that the founder will be able to weather the tough times, right? If you've got a great idea and the market is responding, bulk of the founders will be able to succeed in such situations. Whether the founder will be able to succeed when things are not going correct, when there's a downturn in the market, is the founder someone who would chicken out? Is the founder who would be even more aggressive when the markets are tough? That kind of personality traits is what I look for as far as the founder profile is concerned. The second one is the uniqueness of the business idea. I typically prefer something which is different in nature. I try and shy away from cut copy paste models which can easily get replicated by someone else. Um, it makes me think, it makes me feel that, yeah, I never thought of this, so this might really have an opportunity. The third one is scope for monetization, right? You asked earlier in the podcast about founders burning money and spending a lot of
Mhm.
money. uh, I would probably want to see the monetization journey fairly clearly before I actually invest. It's very important to understand how and when they are actually going to get returns to start off, to pay up for their expenses and later to make profits, right? So profitability, as you know, is a very important buzzword which has come late into the startup ecosystem.
Mhm.
But now that it has, I think everyone is prioritizing profitability over growth, right? It's more important to be clear how you will make a profitable business rather than growing yourself into a unicorn, right? No point in being a unicorn if you've got crores of rupees in losses month on month, right? You'd be better off having a small base, a small valuation, and yet you're profitable and independent, right? Profitability also leads to achieving break even. And once you achieve break even, that urge or need to run after funds every 6 months or every 12 months reduces drastically. And that gives you confidence to be able to think from a calm, clear mind and say, what I want to do. I will only do what I want to do. I don't need to be at the mercy or uh, at the threat of an investor. Do this, do that. I can run an independent shop even if I've taken investor money. So that's a goal which founders should orient themselves towards. The last one is scope for exit, right? We as investors are investing with certain obvious expectations on financial return, and we would only get financial returns if someone gives us an exit, right? Someone buys the stock back from me. So it's very important for the founder to be able to lay out that clear path. What's the potential exit for an investor in this investment? How long will I need to stay invested? What is the stage at which they will decide to encourage secondary shares to be sold? That is, shares which we bought from the company to be bought by the new investor, rather than he investing in primary shares, which will allow him fresh equity. Yeah.